Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Taiwan weighs some of its toughest restrictions yet on AI chip sales to China. We'll have the details. Plus, the AI IPO race, it heats up with OpenAI joining its rivals with plans for a potential public listing later this year. And Apple lays the foundation for the AI era. But how soon will it come? As it hints that the company's upcoming foldable iPhone is on deck. But first, a check on those markets. We're off by 0.8%. We have been optimistic to start trade, and then suddenly we've turned quite a leg lower into negative territory. And it is tech chip stocks in particular that drag us lower, but it's also the key player that is Apple, key player that is Nvidia that drag us down from a points perspective. I shine a light on what's happening in terms of hardware. The Philly Semiconductor Index, the SOX as we call it, 1.8% lower on the day after having reprieved some of the Friday sell-off. Yesterday's trade, Apple off again, the juggernaut off by 2.7%. That's important in terms of points. It's important to the overall index, and it drags the S&P 500 lower as well. As maybe there's some anxiety as to when really we will get Siri AI in our hands. But first, we also talk Taiwan, and it is weighing some of its toughest restrictions yet on AI chip sales to China. A move that will bring it closer in line with Washington amid mounting US concern over technology leakage and national security. For more on what it means for the AI race and the US-China tech tensions, we're joined by Bloomberg's global tech editor, Peter Elstrom. Is this significant, this move?
It's certainly significant. The most sophisticated chips in the world are made in Taiwan by TSMC, of course. And what we understand from our sources is that the Taiwanese government is now weighing these restrictions on making it a crime to export advanced AI chips to China. Now, as you mentioned, this is in line with U.S. restrictions already, where NVIDIA can't sell its most advanced AI chips to China, for example. But why is this important for Taiwan? It is because they hold that place as the manufacturer of these key chips. But also, Taiwanese authorities will be able to use more tools to be able to enforce these restrictions within Taiwan. They did detain their first person because of these export restrictions a while ago, but they had to do it because of falsifying documents, not because it's a crime right now to smuggle chips out of the country. So it gives them a few more tools to be able to enforce these restrictions. It's a sign that President Lai there in Taiwan is taking a much harder line against China.
And what does that mean for relationships between the US and China? What does that mean in terms of more bellicose conversation coming from the leadership in China against Taiwan?
Well, you're alluding to the complexity of the situation. I mean, we just saw President Trump go and visit Xi in China. They talked about these very issues. There was a lot of discussion about many different things, including trade and technology in particular. So it's a moving playing field at this point, and the Trump administration has signaled that it would allow NVIDIA to sell the H200 chips, for example, into China. China isn't sure that it wants that. They also would like to develop their own domestic semiconductor industry. They want to support Huawei and other companies like that that are trying to build in this area. So it's a complicated task. It certainly does mean that there are tensions that remain between the two countries when it comes to these kinds of technologies, and there's not a resolution in the near future.
We just saw, in fact, China preparing 2 trillion yuan of spending to really focus on its own domestic AI build out, whether that be data centers. In many ways, that's going to be a focus on its own chips. But Peter, we also got that sort of interesting news that the Pentagon is really, once again, reamping some of the concerns about Chinese companies, tech companies, and their relationship with the military. All of this spells that antagonism just remains.
Yeah, the first story you mentioned is a very important one. Again, a people familiar story that we wrote about how China is weighing this plan to invest 2 trillion yuan, roughly $300 billion into data centers in the country. This is kind of the missing piece in the Chinese AI industry at this point. As we saw with DeepSeek, Alibaba's work with Gwen in particular, they've been quite successful at developing advanced models, but they've made nowhere near the kinds of investments in infrastructure and data centers that we've seen in the U.S. And now $300 billion works out to about $60 billion a year over 5 years. It's not nearly as much as the 4 hyperscalers are spending. They're aiming for $725 billion this year. So it's sort of a 10-to-1 ratio. But these data centers are much less expensive in China, and it's a sign that they're going to compete on this infrastructural level as well as the model level. So that's a big step for them.
Fascinating. Bloomberg's Peter Elstrom with a wrap of all that Asia news. We so appreciate it. Look, as AI becomes increasingly tied to both geopolitics but investment strategy, investors are looking beyond the initial infrastructure build-out potentially and actually applications of AI. Let's discuss that with Lei Qiu, AllianceBernstein, head of thematic equities, who sees AI adoption broadening as the focus shifts to long-term competitive positioning. So at this moment, just to bring in the US and China perspective, how competitive is the US in the build-out of AI, data centers and the like? How solid is the supply chain if we're worried about US-China relationships and what it means for Taiwan?
Yes, I think supply chain is important, but if you think about US holistically, I do think a lot of the leading edge technology comes out of US. And if you look at the US companies, the tech giants, when you look at the billions and hundreds of billions of dollars they're spending, they're actually quite strategic about it. And the pace of innovation and the innovation in architecture itself is actually picking up pretty rapidly. So think about them, they're thinking about the cost per token holistically. And more companies maybe are taking that holistic view and be more vertically integrated. And they think about whether it be Google introduces proprietary chips, etc. So they are thinking about different architectures, how to lower the cost per token so that set them ahead in terms of competitive advantage. So because all the hyperscalers are all competing in it, and in a way it's an arms race, and everybody wants to get ahead because that actually bodes well for their long-term competitive advantage and long-term margin. So because the competition is so high that we do think the US at this moment, when you look at architecture, certainly US is quite ahead of most people in the world.
I think that vertical integration is being so clearly demonstrated by SpaceX at the moment. The fact that Elon Musk is deciding, yes, I'm a space giant, I'm an AI giant, but also I'm a data center giant, and actually I'm selling some of my compute to the likes of Alphabet and Google, or indeed Anthropic. Is that the way in which you would like to see companies thinking themselves in a more vertically integrated manner, or do you want to see more specific applications of AI, and is that also attractive?
I think it's both, actually. It's at this point of the cycle, it's certainly important to see more applications come out. But if we look back historically, it's actually quite interesting. Vertical integration and that type of cost advantage is very hard to replicate. And in this very compute intensive and capital intensive cycle, I think vertical integration is something that's very interesting that's worth considering from an investment perspective. But that said, if you look in the past cycle, what happened is we built a massive comms infrastructure, and then an entire ecosystem that's capital light ultimately monetized, and that's created the tech giants as we know today. So it's probably too early to tell, but I certainly think vertical integration seems to be a direction that a lot of these companies are considering, and we're watching very closely. It could be quite interesting.
Are you feeling comfortable with the capex still of a lot of these large companies and the industry writ large?
I think this year we always thought that it was going to be, this has to be the year of AI adoption. And the fact that token is being utilized and adopted at such a rapid pace is certainly a good sign that AI is being adopted, it's being used. So that makes us feel better about the amount of capex that's going into it, because ultimately we do want to spend and build a road to somewhere. And seeing the early signs of rapid adoption is certainly very, very encouraging.
You're all about themes, you're all about long-term perspectives and not single names. But at this point, is there going to be better entry points to the market? Does it ever worry you, give you cause for angst at just how high we are in general trading on big benchmarks, at big private market valuations, big public market valuations?
I think not all companies are created equal. And I think we have to look at the company really one by one in terms of we really have to look out. And I think historically when we look back, sometimes the consensus street estimates, they get it right the near term, but they miss the long term. And it's the long term that gets revised up and up. That ultimately determines how much a stock should be valued today. So in a way, to look out actually allows you to make more money near term. So it's really about long-term total addressable market, and more importantly, the ability to hold your margin and get the long-term profit. That's what ultimately determines whether a stock is valued fairly today.
Lei Qiu, we love having you on the show. Thank you for joining us of AllianceBernstein there. Meanwhile, coming up, OpenAI does indeed join its AI rivals in the race to potentially go public. We'll have the details on that S1. This is Bloomberg Tech. So OpenAI has joined the AI rivals with plans for a public listing potentially later this year. Look, the ChatGPT maker confidentially filed its S1 with the SEC, but it said the timing of an IPO hasn't been decided because there are still things it wants to do as a private company. Bloomberg's AI reporter Shirin Ghaffary joins us with the details. So what would those things potentially be? Why make it still unclear if they're going to come as soon as the fall?
Yeah, the company said this is really about optionality for them. Of course, there are a lot of factors when a company's deciding to go public. There's the market, how they stack up to their competitors. So these could all be reasons, right, that a company has in mind when they're thinking about the exact timing of going forward with the filing.
Going forward with the filing, going forward with the next phase of OpenAI. I thought it was really interesting. At the same time as we learned that they've filed an S1 confidentially, they're also putting out a statement about the control of AI, about aligning it with humanity. That was coming from Sam Altman and the chief scientist. What did you make of the blog?
That's right. There's been a lot of talk lately in the AI world about the idea of self-improving AI, that these AI models are getting so good that researchers at the top labs are actually using them to program the next model. And that's caused both excitement but a lot of anxiety. We actually saw Anthropic last week come out with a blog post even calling for a potential pause if this turns out to really be the case, that these models are sort of improving so quickly and getting out of control. So I think, Altman's post is in a way in conversation with that and acknowledging this idea that the AI is starting to automate itself and weighing some of both the opportunities but also risks there.
And I think that's so interesting that, of course, again, just by outlining that blog post, we're thinking about Anthropic timing, OpenAI timing. One puts a blog, the next puts a blog. One's gone filed confidentially, the next one has. How much is their anticipation? How much is their worry that they're coming at the same sort of time?
It does feel like a race on every level right now between these two sort of top AI firms, both at the technological level with them releasing new models sort of neck and neck every few months, now even every few weeks. On the, sort of ideological level about the direction that they're going to go in, balancing the risks and the benefits, as well as just this IPO timeline. So I think it's one of the closest races, certainly, that I've ever covered in the tech industry, and extremely competitive right now on every level.
And you cover it brilliantly. Thank you, Bloomberg's Shirin Ghaffary, on all things OpenAI. And let's stick with that IPO pipeline. Look, the AI names that we've just talked about, if you add in SpaceX, that's $3.6 trillion a market cap that might be coming to the market in the next few months. But according to Pitchbook research, OpenAI may end up being the most expensive bet. Harrison Rolfes is with us, senior analyst of Pitchbook's private company coverage. Joining us now. Look, we can't see the detail of the revenues and the numbers that's been filed confidentially with the SEC, but you take a great crack at it with an eye on OpenAI, your late-stage company research, and you think that OpenAI is expensive in some of your frameworks. Can you talk us through it, Harrison?
Well, yeah, so OpenAI has essentially built the most widely used AI product in history, but they rely on so much capital-intensive compute that their profits aren't necessarily going to cover their costs. So when looking at OpenAI, we want to see their Microsoft terms, we want to see how their accounting works, we want to see how the enterprise revenue as a share total and their net revenue retention, the annual compute obligation, and the related party disclosures to really figure out exactly where they stand as a true business as opposed to the hype that's surrounding them. The framework that I've created, this AI business quality, essentially looks at OpenAI on 5 different dimensions. It's revenue quality, computing independence, moat durability, governance optionality, as well as just capital efficiency.
Yeah.
So when you look at a company who really has a strong AI mind share, but isn't focusing on the true business qualities that make a business successful in the public markets,
right,
it's something hard to evaluate right now. And that's why they score the lowest on my scoring system. And
4.8, right?
One of the highest valuations.
4.8 out of 10 on your AIBQ framework. Now, I'm interested in that sort of other party's perspective, because the Microsoft relationship is one that you drill down on, and perhaps some of that revenue sharing is something investors should really be thinking about.
Absolutely. The Microsoft share aspect is very unique. By by capping how much they owe Microsoft, it frees up some sort of revenue. However, it's still unsure about what's going to happen after 2030. And that uncertainty is going to make it very hard for investors to look past 2030 and see if they're going to succeed until then.
Can you talk a little bit about what you anticipate for governance structures coming from these companies? We're going to dig into it in a bit at the end of the show about questions people have about SpaceX's governance and the control Elon Musk has. How much are you starting to see how much control might be had by OpenAI? For example, Sam Altman, we understand, doesn't own any significant portion of equity.
No, it's interesting from going from a nonprofit to this just new PBC structure. He's essentially trying to find a way to be the good guy, but at the same time, he's already dealt with such backlash from the board and other parties involved and other investors, where they are even unsure whether or not they want to deal with these sort of issues. However, Sam Altman still finds a way to make it happen, and now people are really relying and betting on his future and his aspirations to bring OpenAI to number one.
Number one in a race. We keep talking about it as feeling like some sort of race, but it is about mind share. It is about oxygen in the room. It is about money that's going to be able to be allocated to these companies when they go public. Is there a worry that they filed confidentially last and we're getting SpaceX as soon as this week?
I think by filing last actually gives OpenAI the opportunity to learn from their competitors. OpenAI can actually see where Anthropic is going wrong, exactly how they can adjust.
Are they going wrong? Where are they going wrong?
OpenAI could be going wrong with their gross margins. They don't really break down exactly the tier and the compute costs associated to it. And we'll really get a sense of the hyperscaler involvement with OpenAI and just the overall reliance on them to take them to the next step. And then in relation to SpaceX, we're going to get a sliver of the AI aspect from XAI. However, that's not going to tell us enough of what it takes to be a leading frontier AI model. So the public markets are going to be the ones to determine how much it truly costs to run an AI business. And they have SpaceX as a somewhat of a comparison, even though they're a space company.
Harrison Rolfes of PitchBook, thanks for bringing the analysis. We appreciate it. Coming up, Apple unveils a series of updates at WWDC, but says it isn't able to launch them in the EU due to a standoff with the bloc's antitrust watchdog. More on that next. This is Bloomberg Tech. Apple used its Worldwide Developers Conference yesterday to lay the foundation for the AI era, unveiling a range of products, including iOS 27, Siri AI. Within that, the company still has to overcome, though, investor skepticism about this AI strategy. Bloomberg's Mark Gurman joins us now with more details. Look, the skepticism is there if you're looking at the share price. We're down again. It traded lower yesterday. Is there some anxiety about the pace at which Siri AI will be unfolded to us all?
Yeah, thank you for having me. Well, there are concerns about the pace. Obviously, they said that it'll launch in English later this year, but Siri AI is real. If you're on the developer beta, if you're not me, I guess, you're able to get off the wait list and try these new Siri features out. I think the response has been mostly positive at this point. As I said before the event, what Apple's doing here is they're going from completely subpar to completely adequate. We're not seeing whiz-bang AI features that you're right now seeing from Google, OpenAI, Anthropic per se, but you're seeing Siri work. And so what Apple was finally able to do was take something that had so much promise for over a decade and finally make it work by recreating their underlying models, using technology from Google Gemini, using some new AI under the hood techniques, and actually presenting users with something they think they're going to be able to use on a daily basis.
Yep.
And so the concerns that should be out there really are what happens to ChatGPT, Anthropic on the Apple platform, because a lot of people now are going to have a real LLM built in.
And what happens to other rivals, maybe even Meta AI? Look, what's interesting is, as we've been speaking, there's been some breaking news that Meta Platforms have been ordered by the EU to temporarily halt policies that allegedly block AI firms from operating on the WhatsApp messaging service for businesses. This is the EU once again basically saying you need to make everything available to all your rivals at all times. This is something Apple's spoken about. They were sort of mudslinging with the EU earlier today about whether Siri AI is going to get to the EU users slower and whether it's Apple's fault or the EU's fault.
Yeah, I mean, you've seen other features be held back due to the negotiations between Apple and the EU, iPhone mirroring being one of them. There were a few other features on the operating systems last year, Apple Intelligence being one of them, that eventually expanded to the European Union. So I'm confident this will eventually work out. But yeah, you're seeing a public war of words play out between Apple and the EU right now. And we have to just see who's going to fold first. These are two big entities, two big personalities. And Apple, rightfully so, does not like the way that the EU is inserting themselves into product development and the way features need to be introduced and implemented. And quite frankly, as a consumer, I'm not in the EU, but I do feel bad for my friends in the EU and my developer friends in the EU who are not able to roll out the newest features to their customers. And if they are a customer, not being able to use the newest feature because these rules are in place. So I don't actually think what the EU is doing is a positive at all.
Fold first. Do you get any hint of a foldable phone quickly?
Yeah, the foldable phone is coming in September. We've been talking about this for a while, and iOS 27 is chock full of hints to this. So really looking forward to this launch. Big deal for Apple, and I think this is going to be a really hot product. This is one that I've been looking forward to for a while.
And the one that you brought us news on for a very long time. Always first. Bloomberg's Mark Gurman. We so appreciate it. Thank you. Now, meanwhile, Apple is also expanding its child safety tools as the governments around the world increasingly clamp down on youth social media usage. Now, features unveiled yesterday at WWDC will hand parents much tighter control this fall, allowing them to better control on devices when kids use the apps, what content they can access, and with whom they can communicate. Now, coming up, we'll come back on OpenAI's S1 filing, discuss the AI IPO landscape with Songyee Yoon of Principal Venture Partners. This is Bloomberg Tech. Welcome back to Bloomberg Tech. We are seeing a rollover in stocks. We started trading higher on the day, and that optimism has since faded, and faded hard for the tech names in particular. If you look under the hood of the S&P 500, it's far healthier, and more stocks are in the green. NASDAQ 100, though, we're off by more than 2%. It's Apple, Micron, Nvidia, AMD, some of the chip hardware names that really tug from a points perspective. And this is as companies, well, banks, Bank of America, for example, saying there are too many red flags right now. Take profits. And people are doing that? Maybe. They're getting some dry powder ahead of some massive IPOs. Let's take a look at today's big number, $3.6 trillion. That's the total market cap of the three big upcoming IPOs, if indeed they do come. OpenAI getting itself optionality. Anthropic, too, they filed confidentially with the SEC. But SpaceX, that's on deck for this week. This as these AI companies are racing. They're raising tens of billions of dollars to buy chips, data centers, build more advanced AI systems. But look, historically, mega cap IPOs, they have a rocky start in the first few months of trade. Look, stocks often slump in the first year. Could these upcoming listings be big enough that it just doesn't really apply here? The rules are off. Let's discuss with Bloomberg equity reporter Carmen Reinicke, who's trying to, with an unprecedented IPO at the end of this week, trying to see if there's any historical precedent here. You go back to some Truist found data, 30 mega tech IPOs compared to SpaceX. How have they performed in the last 15 years?
So the majority of them, after 1 year of trading, have been down. They've slumped a little bit in that first year of trading. But overall, the entire group has a maximum drawdown, an average drawdown of 55% in that first year of trading, which is really incredible if you think about it. That's a huge amount of money, one, rushing into these stocks and then coming out as investors sort of assess all the information that they're getting as, lockups expire and more shares come online. So this it could be different. It's such a huge IPO, and we know there's so much hype that retail investors are being sort of focused on in SpaceX coming to the public market, and that people are excited. They really want to buy into this. So we could see something different happen here.
I mean, maybe there's the silver lining. If you end up feeling that you haven't got the access that you wanted and you're forced to wait, maybe there's a better entry point. Look, we're looking particularly at a story of the CoreWeave founders. They've understandably sold $2.3 billion in stock since the IPO. Is that the sort of supply side weight that you get on these new public companies?
It definitely is, and CoreWeave was really a poster child for extreme volatility in the year after its IPO. It kind of just hit that threshold, I think, in March, and it was up 400% at one point, and then it had a drawdown of 65% from that point. And we saw Magnetar offload half of its position, and these insiders sell. I mean, the stock is still up more than 150% from its IPO price, but you do see these kinds of pressures. They've also had some earnings reports that investors balked at. So all of these catalysts really add up to choppiness in that first year as the market kind of assesses where the valuation is going to be going forward. And I think that's something that people are looking at with SpaceX as well. If you look at price to sales, it's not profitable yet. It's a really high valuation. That's something people have been looking at in the AI and the tech and the space overarchingly. So investors might want to wait for a better entry point.
Then, timelines are everything. You shine a light on Tesla, for example, and Facebook, which of course is now known as Meta. Meta had a really torrid first year, down 30%, and now it's up 1,400% since the IPO. And if you look back to Tesla, up 25,000% since its listing?
Exactly. So that's kind of the catch-22 here. Do you want to try to buy in on the first day where you could see a huge pop, right? And then maybe you're buying at a more expensive price, or do you want to wait and see what happens? Overarchingly, it seems like if you're a longer-term investor, the data show that these IPOs do really well, right? These stocks have gone up astronomically. So it's just all about finding that right entry point, finding that right time, that time horizon, and when to get in.
And how much business models evolve and how much we have to understand about these business models as they go public. Bloomberg's Carmen Reinicke, it's a fantastic story. Go read it. Let's discuss this and more now with Songyee Yoon, founder, managing partner of Principal Ventures Partners. It's a Silicon Valley-based early-stage venture firm focused on AI-native companies. But why you're so interesting, Songyee, is also because you serve on the advisory council for the Institute for Human-Centered AI at Stanford University. You've been an operator at big gaming companies and tech. Songyee, the business models we're about to get our heads wrapped around in the public market. Should we be as excited about them as we are with SpaceX, with Anthropic, with OpenAI?
Yeah, I think this is a really tremendous moment. If you think about the total market cap that we're talking about, it constitutes about 10% of the NASDAQ. And we are already talk about how concentrated NASDAQ market is with those big top 10 companies taking about more than 40% of the total market cap. Adding this on top of it make NASDAQ even much more concentrated and expose the risk of the volatility and kind of secular risk of the technology in the market.
How much is there an anxiety that not only they're going to be an outsized weighting in, just passive funds more broadly, but they're also all related to one another in some way? The fact that Anthropic's buying compute off SpaceX, the fact that we're starting to see this circular deal making come ever more present into the public market.
That's right. I mean, that's one of the reasons why people kind of point out that there is some kind of the bubble element in kind of today's AI marketplace. And in addition to that, I think it's another thing to think about is that technology is kind of at its nascent stage. A lot of the technology, this AI is a real technology, and it was in the phase of tech demonstration, and we have seen tremendous potential. But it by no means that in terms of engineering that need to go into it for optimizing and bring it down to the right price point and et cetera. There's a lot of work to be done. So in terms of the kind of technology and infrastructure and how it's formed, it's not near at its kind of the end state, and there's a lot of the improvement to be done. And I think that the improvement could be current big giants, or it could come from the other startups that are working on solving the specific problems. So there is a lot of innovation to be ahead, and I think that's an interesting moment because another thing to think about is that this kind of the access to the capital and building this capital moat around these companies has become part of the feature of their service and their business. And I think there's a lot of kind of the circular deals that you mentioned, and it's kind of creating this the moat against new entrants. And I think that's kind of one of the reasons why that there is a rush into this like IPO and access to large sum of capital.
I mean, you were previously a member of South Korea's Presidential Advisory Council on Science and Technology. I mean, this AI exuberance and hype hasn't just been US alone. We've seen extraordinary growth of South Korean stocks, SK Hynix and the like. Is this a global moment of reckoning? Do you think that there is a so-called bubble and it needs to come down?
I mean, I think it's AI is an interesting technology because as soon as we say like artificial intelligence, that name itself really kind of sparkles imagination of a lot of people, and people tend to anthropomorphize like what AI can do, and I think that also fuels into this kind of the hypey behavior and like over expectation and extrapolating what this technology can do. And because of, I think that because of the global dominance of the U.S. tech market, tech companies over the past decades, I think the growth of this giant AI company is affecting the supply chain outside of the U.S. and like semiconductor companies, infrastructure companies, not just in the U.S. but elsewhere. And I think that's also feeding into the other markets' excitement.
I mean, you see innovation at the public level, sitting on the board of HP, at the private level when you're investing for Principal Ventures Partners. Where is exciting you? Where do you think is undervalued right now if you're going to be putting capital to work privately?
I mean, there's a lot of innovation to be made. I think if you think about airline industry, right? I mean, I think there are only a small number of companies that can make an engine. But if you think about where all the business happening is taking place, there are companies that are making airplanes, they're operating airlines, and there are a lot of businesses, hospitality around it. So I think we have found this like kind of tremendous engine technology that has a potential to build whole new businesses and open up the whole new possibilities. But there are a lot of businesses and applications to be built on top of that, and where the more value is going to be created, where the value is going to be captured and held, I think is yet to be determined.
Fascinating. Songyee Yoon of Principal Ventures Partners, thank you for walking us through your thinking. We hope to welcome you back soon. Meanwhile, Elon Musk has unveiled a more detailed look at an initial version of an AI data center satellite SpaceX plans to build. That's as part of a roughly 1 million satellite network that will do complex computing for AI in Earth orbit, in space. So during a 30-minute video shared on X, Musk really laid out other plans for the future of this company, including the continued development of its Starship rocket and joint terafab facility with Tesla that aims to manufacture computer chips in the United States. Coming up, well, we got more on AI, and this time it's all about robotics. The company Standard Bots is just raising $200 million in a new round of funding. Its CEO, Evan Beard, is going to be joining us next. But let's get back to markets, because there's been a huge, like 1,000-point swing on the NASDAQ 100 right now. I'm looking at it's going from peak of 29,800 down to now 28,800 in the course of but half an hour or so's trading. We're seeing money being pulled out of chips, of hardware in particular, of Apple. We're seeing the S&P 500 now down by a percentage point, the semiconductor index off by almost 4%. It is a volatile session and a volatile few trading days. This is Bloomberg Tech. New York-based startup Standard Bots has raised $200 million in a new round of funding to scale its AI-powered robots. Now, as the company tracks to secure 10% actually of all robots deployed in the United States, its CEO is actively advising Congress on banning Chinese competitors over national security risks. We can talk it all now with Standard Bots co-founder, CEO Evan Beard. Congratulations on the raise. Let's start there. Series C, $1 billion valuation. What do you need the $200 million for?
Thanks so much. Thanks for having me back. So we're using this funding to quadruple our manufacturing footprint. We've got a huge backlog of demand. We're growing very quickly, and to also invest in more R&D.
So it's going to be in Long Island, I understand. How much sort of square footage, what sort of talent and R&D hardware do you need?
Yeah, so we have an engineering office in New York City, and our manufacturing space is 70,000 square feet. It's about an hour outside New York City, but we think this is the best city on earth, the best place to build a robotics business. And Standard Bots now, we believe, is America's largest AI-native industrial robot manufacturer. And we're just getting started.
And by stealth almost. I mean, how many do you already have deployed? How many are out there in the wild? What makes you such a significant force in robotics already?
Yeah, well, I could say we have basically in every state, we have small and medium businesses using our robot, and we have iconic companies in aerospace, automotive, oil and gas, data centers. So really we're working with the full gambit of folks that use robots. My favorite customer makes parts for the Long Island Railroad, and the reason I like that—
Shouldn't pick favorite children.
Yeah. They were our first customer, still a customer after a few years. And what it's really emblematic of everyone who uses our robot, which is they're making the things that make America, whether it's the infrastructure or the products that we use.
So the railroad, are they kind of playing at using robots and understanding how they're going to work with them in the future? Or are they really giving an awful lot of hard duty work to these humanoids? Are they able, or arms that you make, are they able to hire less, for example?
Yeah, it's a good question, and investors ask that, but 85% of our robots are doing production work. So these are not pilots, these are not just testing things out. They're actually doing a job, and we think of robots as the power tool of the 21st century. So they really enable a worker to do much more work before. They improve the efficiency of our country and our workforce. And Caroline, the problem that we see and what we said to Congress was the United States right now is not competitive in manufacturing. If you look at the United States against China and other countries, it can be 5 to 10x cheaper to make your parts in those countries. And so we think robots are this foundational technology that we as a country need to be more competitive, to be able to compete, and to ultimately bring back jobs and bring back our manufacturing base.
Foundational technology. Now, you need the models to be able to drive these robots. I'm interested as to what you've done. I mean, many would say, NVIDIA in particular, saying that we're not quite there yet with physical AI. We're going to have this ChatGPT moment.
Yeah.
But how are you seeing these models evolving, or indeed your robots able to change and diversify?
Yeah, it's a great question, and it's a reason why the U.S. can take a lead in robotics right now. And the answer there is we're focused on training robots through demonstrations. So you show them what to do. We have a handheld device for that. And you can just perform the task, and you don't have to be an expert. And what it allows us to do is take an average assembly worker, a manufacturing worker, and they can now program a robot and train an AI model. And this allows the robots to handle variability that they couldn't before. It allows them to do jobs that you just couldn't automate before, because today's robots, most people don't know, they really just replay motions. You program them millimeter by millimeter, and they can play through and paint and weld that way, but they're so limiting. And so this is a fundamental change in what's possible and what you can automate with your robots.
And so, Evan, many would say, well, you're getting people to train their replacements. How are those that are working at the railroad feeling about helping train these robots? What do you see as the future of manufacturing workforce?
It's a fair question. It's one we think about a lot. And my favorite anecdote in this regard is really from Milton Friedman. And he visited a job site in the 70s, and he asked, why aren't they using earth-moving equipment? It was in a developing country, and they were digging with shovels. And they said, well, this is a jobs project. So if we gave them shovels, if we gave them earth-moving equipment, it would create way fewer jobs. And he said, well, why don't you just give them spoons? And the point that Milton was making was you earn the right to create high-paying jobs by creating something of economic value. And I think the United States in this next transition wants to be on the right side of that. And we want to use the tools which are in the physical world, it's robots. And we really view them as this power tool, like a drill for workers to be more efficient and be able to do more. And we want to be on the right side of that.
Right side of that, with $200 million to keep on expanding here in the state of New York. We appreciate your time. Thank you very much indeed. Standard Bots co-founder and CEO, Evan Beard there. Now, the Mizuho Technology Conference is underway here in New York as well, bringing together top tech executives, industry leaders. Speaking earlier with Bloomberg's Remain Bostic, Synopsys CEO, Sassoon Ghazi, really weighing in on the tightening restrictions targeting China. Take a listen.
We are assuming China will remain the way it is currently, meaning our China business specific to IP was one of our fastest growing regions that had a significant headwinds due to all the restrictions. I don't believe these restrictions are going to change. If they change, fantastic. If not, we have plenty of opportunities outside of China to capture the growth.
Coming up also in New York, well, the city's comptroller slams Elon Musk's near total control of SpaceX ahead of the IPO. But excluding the company won't be easy for the city's pension fund or others. We'll have the details. And look, let's get back to these public markets that SpaceX is about to enter. They're down pretty hard. The Nasdaq 100 rolling over 1.9%. We were higher at the start of trade. S&P 500 off by a percentage point. We've got Apple, you've got the likes of big tech. Tesla's in the red at the moment. We've got Micron pulling down in a points perspective. And that's why we see the semiconductor index also under pressure. This is Bloomberg Tech. New York City Controller Mark Levine says Elon Musk's unprecedented control will have over SpaceX serves as a new level of disregard for regular shareholders' rights. In an interview, Levine said he, quote, understands that we're in an era of founders wanting more control, but that what Musk is planning with SpaceX is way beyond what we've seen. This is, of course, in reference to the stipulation that buying into SpaceX requires accepting a governance structure, giving Musk roughly 80% of voting rights. Bloomberg's Olivia Raimonde is one of the key reporters that have just gone global with this story. And let's start with New York State as well. There are a load of people managing pension fund money who are worried about this level of control.
Yes, Caroline, absolutely. I think that the controller's main concern is about having shareholders' voices be heard when they invest in a public company, and to have leadership and executives in those companies be held accountable to the concerns that their shareholders have around different issues related to the governance structure of a company. I think what Levine wanted to explain to me is that he wants shareholders to still be empowered with their ability to vote in a one vote, one share type of structure.
So is he saying, I'm going to boycott it? Is he saying I can vote with my feet or my money and make an impact? Or does he have to kind of go along with what is the biggest IPO ever?
That's a great question. And based on my conversation that I had with him last week, I do not think the goal right now is to divest from the company or to exclude any type of exposure. He explained to me that with the pension system's own governance structure, that would be difficult. They have done sector-based exclusions before for the oil and gas industry. But to eliminate one company, he said, for their own governance structure would be unprecedented. What he wants to do is he wants to engage with Elon Musk. He reached out to Musk in a letter co-signed by CalPERS and the New York State pension funds. They want Musk to engage with them and to work with them so that they can make changes from within rather than just saying we're not going to invest.
Thus far, no response. This is a global issue, though, and in some pension funds in Europe, they actually are saying, I don't want anything to do with this.
We've had pension funds and investors in Denmark and the UK say that they are going to sit out from the IPO, that they will be willing to adjust their funds so that they are not exposed to SpaceX. One UK-focused investor specifically said that they called the governance structure catastrophic and that it would not be prudent to have their investors exposed to it.
Fascinating. Well, we can go in a lot into that story about some of the reticence and the reasons why. Olivia Raimonde, go read her story. It's a real deep dive into the governance of this business. Meanwhile, we're looking at live pictures of NASA, which is just about to introduce its next Artemis crew. 2 months after sending astronauts on a record-setting lunar flyby, NASA says Artemis 3 launched 4 astronauts from the Kennedy Space Center in Florida aboard the Orion spacecraft on the Space Launch System rocket. The mission is going to last 2 weeks. Now, that does it, though, for this edition of Bloomberg Tech. As we await that news from Artemis 3, we see that the market's really taking a turn. Look, we're plunging to new lows of the day. Nasdaq 100 off by 2.2%, let's call it. 1,000-point swing. This is as you see really big tech names take the brunt of the hit. We've got money coming out in particular of Apple, of Micron, of Tesla. In fact, the S&P 500 is off by 1%, let's call it, but actually underneath the hood is doing rather better from a cross-industry perspective. It really is tech in the line of fire, as many feel that perhaps we've run too far, too fast. There's a lot of volatility in the market and a lot of red flags. The Bank of America has been saying to clients, too many red flags. Take profits while you can. The semiconductor index off by 4.4% after we clawed back some of Friday's sessions losses just yesterday. Look, you can recap all of this. Don't forget to check out the podcast. Go find it on the terminal as well as online on Apple, Spotify, and iHeart. From New York, this is Bloomberg Tech.